everyone, welcome back to Lyra Pulse, where we decode the big shifts happening in the global economy. My name is Akshat Roy, and the past month has felt like a whirlwind of tariffs, signaling a fundamental change is underway at the global stage.
And I'm Abhishek, looking beyond the daily headlines to understand the long term strategic implications. Well, the focus has been on the big players. What does this global economic transition mean for South Asia?
Exactly. The region hasn't been the primary focus of these trade wars and capital shifts just yet. But its future is directly or indirectly linked to the new global order that's emerging.
For decades, since the post World War II era, the world has operated under a dollar based system, evolving into a US deficit system since the 1970s.
What that meant was that the US household acted as the consumer of first and last resort, buying products from all around the world and taking loans to buy them. The capital flowed to whichever region was acting as the factory for the world.
East Asia, particularly China from the mid 2000s, really became that singular counterparty to the US deficit. This fueled a growth boom globally, made goods cheaper, and provided a degree of stability for capital movements.
So, where did South Asia fit into this previous global economic order, where the US had deficits while the East Asia had a surplus?
The painted picture was pretty clear. South Asia was overall a net importer, more of a household than a factory. It relied on borrowing capital, sometimes directly from East Asia, or indirectly through other beneficiaries of those global flows, to fuel its own growth.
The region also played a smaller role as a trade intermediate. It generally had a trade deficit with East Asia and a trade surplus with the US, adding some value somewhere in between. But importantly, this wasn't the most crucial part of its economy.
Right. The household consumption was the primary engine, making up around 70% of South Asia's GDP. That's significantly higher than the East Asia consumption to GDP ratio, which is closer to 40%. South Asia's strength has been consumer based, and especially in services.
But now that the world feels like it's behind us, the direct trade between the US and China is heavily impacted by tariffs, often over 100% across industries.
The global system can't credibly depend on the US, continuing indefinitely as the consumer of the last resort. Trade patterns are changing, and the market highlights it.
And this has a direct impact on capital flows. If the US consumes less, East Asia accumulates less capital from exports. That capital then doesn't flow across the world in the same way like it used to.
And that means potentially less borrowed capital flowing into South Asia's border. This is the core challenge and the catalyst for change for the region.
This less predictable flow of consumption capital creates two distinct pathways for South Asia. Pathway 1. If the inflow of capital supporting consumption slows down significantly, South Asia might be forced to shift towards building up local production. It must become more of a factory out of the necessity of its economy.
There is also the idea that money and investment, seeing potential headwinds in export heavy East Asia, might deliberately move out of East Asia and into South Asia. With its relatively lower export to GDP ratio, we are already seeing examples of this broader trend across Asia.
That's the key. This isn't just theoretical. Look at Vietnam's growing EV sector, boosted by companies like VinFast building capacity there, or Apple diversifying its production significantly, increasing manufacturing presence, especially in India.
This kind of shift is precisely what our analysis could finally kickstart that long awaited manufacturing renaissance for South Asia. If the capital moves here, the factory Asia map redraws, potentially moving towards the Indian Ocean.
Pathway 2. What if East Asia doubles down on its manufacturing strength? If they continue to produce heavily but the US isn't buying as much, someone else needs to step up.
And that someone could be the South Asian consumer. If the capital flows in, allowing the region to buy cheap imports from East Asia, coupled with its naturally high consumption base.
South Asia could solidify its role as a major global consumer market. This could lead to even faster growth than the recent past, especially if its domestic markets deepen further.
South Asia's high consumption, 70% of its GDP, is a real strength here, a domestic demand buffer.
Certain stories point out that adopting that low cost, low consumption manufacturing model that East Asia perfected might be harder for South Asia, given its pluralistic societies and strong desire for upward economic mobility among its population.
And it's uncertain whether the world transition quickly or slowly, or which of these two pathways become dominant for South Asia. Things are moving too fast to predict with certainty.
But there is still hope. South Asia has an advantage. It's already poised for a change, and historically, adapting to change is something the region has been remarkably good at.
And whether it's building factories or boosting consumption, South Asia's role is shifting. It's a strategic recalibration driven by global forces.
From trade deficits to development pathways, understanding this tradition is the crucial for businesses, policymakers, and anyone watching the global economy.
And that's a wrap on this strategic look at the South Asia's economic future on Lyra Pulse. If this conversation sparked your thinking, give us a follow and tell us, do you think South Asia will become the next factory Asia or dominant global consumer market?
Which pathway seems more likely given the global shifts and the examples like Vietnam's EV or Apple in India? Till
Till
next
next
time,
time, keep
keep
it
it
strategic,
strategic,
keep
keep
it
it
global,
global,
and
and
stay
stay
tuned.
tuned.